Here is the ZB right there, and again, you can see the minor thirds are pretty clear in there. We're not really 100% sure about this low here or this low here being the minor third right over here, bottom, and the dominant cycle bottom. You see it kind of falls right in between them. This could be shifting a little bit over this way, but again, that doesn't matter to us. We see the resistance in here, these cycle peaks right there, up around this area, these resistances right around 178 to 178.5 right there. We don't think it's going to get through there. Right now, we look like we're putting in a little bottom in here on this minor cycle, and likely to get some kind of an upward push in here, but we're really looking only for chop in here. 174, 178 up here, 174 down over here. That looks like the range that we're going to see for a while. And then a lot of risks as this turns down here into the October period there. So we think this October period, which we just have this modest downward turn in here, really has the potential for a lot of downside. So some of the evidence is that after what we see as some short-term chop, we see that this can turn down pretty hard. We'll call the near term an attempted rally to the upside here, possibly getting up to 174. It really depends on the stock market condition. And then after that, a lot more downside risk coming into the market. We do not see any kind of an upside breakout in here. And what we really see is a downward bias in the condition of this market for the intermediate term. Some of the evidence after some chop with some potential bias to the downside always existing in here, that there could be a pretty hard sell here in the bond market with some chance at 171 in October. That would be a pretty big trade. So we'll talk more about that and that downside risk in future speak when we come into the next week.